What if I told you the next global financial crisis may not be very far from now? Right now, the world is facing growing geopolitical tensions, fragile supply chains, rising debt levels, inflation pressure, and increasing mistrust between major economies. And one of the biggest flashpoints is the ongoing U.S Iran conflict, which has heightened fears across global energy markets. Any major escalation in the Middle East could disrupt oil supplies, send fuel prices soaring, increase transportation costs, and place new pressure on already strained economies. At the same time, the lessons of the COVID-19 are still fresh. The pandemic showed how quickly normal life can change. Businesses shut down, travel stopped, supply chains broke, hospitals were overwhelmed, millions of people lost jobs and incomes, governments were forced to spend trillions to prevent economic collapse, and experts continue to warn that future outbreaks or new pandemics remain possible in an interconnected world. That means the next financial crisis may not come from one single cause. It could come from multiple shocks happening at the same time. War in the Middle East, trade disputes between major powers, high global debt, inflation, banking instability, political unrest, and another pandemic. And when several crises collide, the financial impact can be severe, and ordinary people are often the least prepared. We have already seen how far away events can hit close to home. Conflicts thousands of miles away can raise fuel prices in your city. Trade tensions can make food, electronics, everyday goods more expensive. Pandemic can freeze travel, close businesses, and destroy jobs almost overnight. So the real danger is not only one crisis, it's several crises happening at once. And the real question is not whether another crisis will happen someday. The real question is, will you be ready when it does? That's why this video matters. Today, we are going to break down exactly how to prepare for the next global financial crisis, whether it is triggered by a war or trade tensions, recession, debt collapse, inflation, or another pandemic. No fear, no panic, just smart, practical steps to protect your money, your family, and your future until the end, because the final strategy is the same move financially prepared families and disciplined investors use whenever the world becomes stable. So let's begin with the introduction or an overview of how crises spread. Many people think crises stay where they start. That's no longer true. The global economy is connected through trade, banking, shipping, technology, energy markets, and supply chains. That means disruption spread quickly. If shipping routes are blocked, products become scarce. If oil prices rise, transportation and food prices often rise too. If banks tighten lending, businesses slow hiring. And if investors panic, markets fall globally. If another pandemic emerges, travel, tourism, retail, and employment can suffer rapidly. This is why preparation matters, even if the crisis begins far away. You don't need to live in the center of the storm to feel the rain. The first and most important defense is cash reserves. Cash gives you time when income drops. Cash gives you options when emergencies happen. Cash gives you peace of mind when others panic. Aim for 3 to 6 months of essential expenses, and if your income is unstable, try to build 6 to 12 months. Start with small milestone. First, save 1 month of expenses, then 2 months, then three. Keep it in a safe and accessible account. This fund is not for luxury spending. It is for rent, food, transport, healthcare, and survival. During a crisis, people without cash often depend on debt, and people with cash have breathing room. The next strategy is to reduce bad debt now. Debt feels manageable when income is steady, but when layoffs rise and businesses close, debt can become dangerous. High interest credit cards, payday loans, expensive personal loans, and unnecessary financing can trap you quickly. Even monthly payment reduces your flexibility. So begin reducing toxic debt now. Pay extra toward the highest interest balance fast and avoid taking new debt for lifestyle purchases and delay status spending. Freedom matters more than appearances. The less debt you carry into a crisis, the stronger your position becomes. The next one is to make yourself harder to fire. The goal here is to protect your income. Your income is one of the most valuable assets. So ask yourself, how secure is it? If your job depends on a weak industry, shrinking company, or unstable demand, it may be vulnerable during downturns. Increase your value by learning useful skills such as sales, communication, digital tools, project management, customer service, data skills, problem solving, and be reliable, be adaptable, be someone employers want to keep. And always keep your CV or resume updated. A prepared worker can recover faster than an unprepared one. So the next strategy is to build multiple income streams. One source of income is risky in uncertain times. That is why financially resilient people build secondary income before they need it. Examples include freelancing, tutoring, online services, small business sales, sorting, weekend work, content creation, digital products, and even a modest side income can help cover bills during hard times. Sometimes an income stream that looks small today becomes the one that saves you tomorrow. So don't wait for crisis to start building it. The next one is to prepare for higher prices or inflation. Many crises create inflation. That means your money buys less. Food becomes expensive, fuel rises, rent increases, utilities cost more. And to prepare, focus on essentials. Track spending, buy smart, reduce waste, and increase income where possible. Avoid living at the edge of your budget. And if your money is already committed, inflation hits harder. And financial margin is protection. The next one is to invest with discipline, not panic. When headlines turn negative, fear spreads quickly, and many people panic, sell investments at the worst possible time. Then later they watch recovery happen without them. Prepared investors think differently. They diversify, they invest for the long term, they avoid hype, they keep emergency savings separate from investments, they stay calm. Crisis can create opportunities, but only for those who remain disciplined. Never risk money you need for immediate survival. But if your basics are secure, downturns can eventually reward patience. So make good choices when investing. Next strategy is to stock essential household items. Financial preparation is not only about money. If supply chains break or movement becomes restricted, practical readiness matters too. Keep sensible reserves of essentials such as basic food staples, necessary medication, hygiene items, power banks, important documents, emergency contacts, backup copies of records. This is not about panic buying, it's about avoiding last minute chaos. Prepared households make calmer decisions. So the next one is to maintain and strengthen relationships. During difficult times, people matter. Job often comes through referrals, business comes through trust, support comes through family and community. So stay connected with friends, family, former co-workers, mentors, and professional networks. No one succeeds alone during a crisis, and strong relationships can open doors that money cannot. Now to the most interesting part. What smart people do before panic. Financially prepared people usually do three things before a crisis gets obvious. First, they reduce reckless debt. Second, they increase liquidity. Third, they stay patient and observant. They understand that emotional crowds often make poor decisions. When fear peaks, assets can become undervalued. That does not mean taking reckless risks. It means being ready when opportunities appear. Preparation creates options and panic destroys them, or panic destroys those who are not ready. And what should you do to get more prepared for the next global financial crisis? In the next part, I will present a simple 30-day action plan. And if you want to begin today, follow this plan. In the first week, track every shilling or dollar you spend. In the second week, cut subscriptions, waste, and unnecessary expenses. Week 3, save your first emergency fund milestone. Week 4, launch one side income idea. Then repeat the cycle monthly. Small, consistent moves can completely change your future. No one knows exactly when the next global financial crisis will arrive. It could be triggered by a conflict, by trade wars, by debt collapse, by another pandemic, energy shortages, or by something no one expects. But those who wait for headlines are often too late. The best strategy is not prediction, it is preparation. Build savings, reduce debt, increase skills, create extra income, stay calm, and think long term. Because when the next storm comes, you don't want to ask why I failed to prepare. You want to say, I'm ready. And if you found value in this video, like, subscribe, and share it with someone who needs this message today. What do you think could trigger the next crisis? Tell us in the comments section below. See you in the next video.